Good morning, everyone. Happy Friday. Hope y'all are doing fantastic. It looks like BTC just ran up over the last couple of hours. Went from this area right here, 74.50, all the way to a high of about 76.44 or so on Coinbase. I think Bybit was a little bit lower. So here's the thing, all right? I know everyone's freaking out about this and they think that, oh my God, this thing is going to run up all the way. Yeah, it might, okay? We need to have a serious conversation, folks, about the amount of risk that you put to your money in your portfolio when you take a position. Okay, first things first, you need to understand that trading is a game of being right and wrong, not just trying to be right all the time. And the people who are most vulnerable and scared when prices run up like this, maybe just $50, $75 or so, are the ones who are either too heavy in a position or they got in too late without confirmation and they were hoping to catch a quick buck or a lottery ticket on this move, hopefully capitulating down. But you got caught in this chop and you thought that this has to break down. Okay, yesterday I said that there were higher probabilities that it has to break down. Okay, but it doesn't mean that we haven't seen these stop runs before, right? Like before then capitulating and breaking down, right? I cannot help it if people are going to drive up the market to make sure that the stops for the short position get closed out first before dumping the market. And you have to understand why that happens. Okay, the reason that happens is because these people know that they're going to be put in the grave and have to pay up and fork up more money if they don't stop out these positions up here and all these stops that reside over here. And who knows, it might even go higher, right? So what happens is when you stop out these positions right here, these shorts are gone. Okay, so even if the price then dumps and the bears resume their selling, that means that you have to fork up less money, right, as your longs get destroyed or your BTC gets pushed down in terms of value. Because the people who are defending this area, okay, the people who don't want this thing to break down are saying, all right, I'm going to build a wall right here, not like the Mexican wall, just a regular wall of buyers, okay, a regular wall of buyers, and I'm going to make sure that price does not break past this area. Why? Because as a bull, I know that if this thing breaks down further, I'm going to have to fork up a lot of money, hand over my BTC as this thing keeps dumping. And these people know for the most part that this line in the sand right around here, this bottom fib of $7,300 is it. Okay, if this doesn't hold, we're going straight slicing into the 6,000 territory, like 6,500, 6,600, somewhere around that area. I don't know exactly, okay? So they build a wall right here, right? They build a wall of defense to be able to understand that, okay, we need to somehow drive up the prices. We need to make sure that we stop out some shorts. And maybe, who knows, we might get enough people to FOMO into the market and drive this thing up. The bulls are stuck here the same way that the bears are. At least for the bears, they know that they have the momentum of the market on their back, which is we've been dumping since back here in September. We've also been distributing since way back here in July. So the bears already know that, all right, we have the momentum on our side. We're just going to keep selling and keep shorting and push this thing to a point where it just can't break anymore. And we don't really know where that point is. Okay. So for the most part, when I see spikes up like this, I'm not too concerned because I've got my stop set. If it gets hit, whatever, But I also set my stops at specific levels, at invalidation levels. All right. Now you need to understand why you set your stops at specific regions and not just arbitrarily, right? So I set my stop much higher than this red block right here. I told my community I set my stop somewhere around 76.50 on Bybit. Okay. Now who knows? I could still be wrong. This thing goes up like this, pulls back, and boom, takes off, right? But I set my stop up here because I know it's well out of reach, out of these stops that are right here. How do I know stops are sitting right there? Because I know that price stalled here for a little bit in this area right here. Okay, so most people probably aggressively shorted in this area or anywhere in this area, and they're looking at, okay, where's the next lower high, right? Well, it's this one right here. So I'm gonna put my stops all the way up here, and guess what? They all just got sliced. Okay, everyone just got stopped out except me because I put my stop up here. Now, though that's a little deeper, right? And it takes away from my potential margin on profit, but I know for the most part that if we're going way up here, we're going much higher, right? So you can see I did not get stopped and we're now resuming down, okay? But now here's the thing, okay? What could also happen is something that happened back here. Okay, let me show you all exactly what happened over here. So remember when we broke out of this area right here? Prior to that, we ranged sideways, pushed up, came back down, probably, had all these people who longed right here thinking that they were geniuses and they caught the bottom. They went up like this and then prices came down. All those people probably just sold and panic, and then prices climbed back up. Okay, so it could also be a possibility that we ranged like this. The bulls defended their area, stopped out people. Now the bears get to pressure prices down, and they get to test the strength of the bulls again and see if they're going to defend this area again. Okay, and if they do, then this thing might push up higher. So where does that take us? Okay, so let's take it down to the 15-minute chart. All right, so the high of this is actually yesterday's daily, so I'm going to delete this. Okay, but for the most part, we were looking at the high of yesterday's daily as the breaker of if prices close above, then they're going to go higher, which is exactly what happened, right? These technicals aren't that hard to understand. We also know that the open of the daily was around 74.50, and notice how every time prices dipped under the open of the daily, bulls try to push it back up. Pushes down here, pushes back up, pushes down here, pushes back up. Over here, down, up, right? So the bulls are doing everything that they can to hold up the prices above 74.50. The bears are doing everything that they can to hold prices under high of daily yesterday's daily candle around 7,500. Now today's daily candle, okay, this one opened at 74.30, okay, and the low of that is 73.89. Okay, so if we go back, right, we're gonna mark that out. Okay, so open candle 74.30. All right, so we're gonna mark that out, and then we have, let's see here, 73.89. Mark that out over there. 73.89. All right, low of today's candle. Oops, don't need it to be bold. All right, there we go. Okay, so now I expect price to, at the very least, come back to this base right here, this area that was all resistance, okay? So this area right here, okay, I'm gonna make this a different color, all right? So you guys can see, so anywhere between 7,500 and down to about 74.81. Why do I say that? Because you can see over here, right? Rejection, 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 rejection pushes through. If this thing is supposed to go higher, what'll happen is it goes down like this, even presses down into this area right here, just wicks to it, and then pushes back up. I would say for the most part, it'll probably go something like this if it's supposed to go higher, and then boom, okay? But the rejection is clearly, at least for now, pretty strong, right? So we have to assume that at the very least, it should be coming down here, okay? If it's going to push higher. Now, if prices start heading down lower and faster and more aggressively like this, and then it starts breaching the open of the candle, starts breaching the low of today's candle, whether it's today or tomorrow, I mean, I don't know. But if it happens today, in today's daily candle, this thing is going to go down pretty fast, okay? But I highly doubt that the bulls are just going to let up their position just yet. Again, like I said, they know for the most part that if they give up this area right here, this block that's been cemented right here, that, they're donezo, right? Prices are going to go down much lower, much faster. Okay. So this is, kind of like their last breath. I told y'all before that, what was I saying? Can't remember. I told y'all before that, if this doesn't get defended well, we're going to go down to, the 6,000s pretty fast. Okay. All right. Now, again, talking about risk management. Okay. I told you guys, you need to be able to understand where to set stops, why to set stops, and not be freaking out when you do see a spike up like this. Okay. Here's the thing. You're going to be right in trading. You're going to be wrong in trading. Trading is all about probabilities. Okay. If you do not understand that that is part of the game and that you will statistically be wrong a lot, okay, you will never understand that going too heavy in position, especially when you're vulnerable, when the price is going to move against you at the most pivotal time, when you're heavy in your position, you're going to lose your capital. You're going to have less and less capital to fight with for the next trade. Okay, so being able to manage your risk and understand that you don't have to catch tops and bottoms, even if you miss out on a trade, there's always going to be a next one. Why force a trade when I don't know what's happening in this chop right here, right? So if you start to understand the reasoning behind all this, all right, you will become a better man. You will become a better person. You'll become a better trader. Okay, because you won't be FOMOing into trades. You'll be okay with getting stopped because your risk was managed properly. Okay, but most people won't do that. I'm sure a lot of people listening on this video will say like, yeah, you're right, but then make the same mistakes over again, because trading to you now has become almost an essential, gambling type mentality where you have to get your money back or you have to make X amount of money, or I don't know what your mentality is towards taking trades. But whatever it is, you need to change it, because if you don't change it and you're desperate in trades to make money, more than likely you'll actually lose money. Because a lot of the traders, as ironic as it is, the reason they lose money is because they're actually chasing trades and they're chasing money. See, the irony of trading is that the best trades actually come to you in the easiest manner. Okay. So for example, like I just gave you guys an example, right? So say you missed out on all this. Say you either got stopped out up here, or you're thinking that, okay, I haven't gotten into a trade. I'm waiting for my trigger, right? I just told you, you have a couple different ways to look at this. Okay. Your trigger for this trade could be if we bounce off here successfully, and then you see prices climbing back up, right? You could take a long somewhere over here or even over here, right? And then prices could push up higher. Okay, I don't really know how high they're going to go. I've mapped out some of these fibs right here. Okay, the fibs come out from way over here. Let's see, $8,350 down to about $7,300, right? So the high of the fib, I would probably say should stop around, or the high of the price should stop around 618 right there. So 79.50 or so. So say you get an opportunity, where you go like this, and now you're seeing prices climb higher and higher. You basically have a trade. Even if you waited for full confirmation, meaning that you want to be sure that this high is going to get taken out, you can go, wait for the bounce over here and then push back up, and then you can take a long, from here up to this wick, right? To this 618 fib right there. That's a 3.96% gain. All right, that's a pretty, fantastic movement right there if you catch it. But that's if you wait for, confirmation, right? Or like I said before, okay, I stated that for the most part, I expect once 7,300 breaks to go into the sixes. So you wait however long it takes for this thing to break to the downside and take out this low right here of $7,300. So say you wait down here, I don't know, 7,250 or something, right? Even if you took a trade to 7,000, 3% gain. If you took a trade to my targets around 65, 6,600, 8.6% gain. Okay. So you can see that there's opportunities that lie everywhere. Okay. But you are, trying to force trades in a market that is almost really, doing its best to lure you into bad trades, and then you make mistakes, and then you lose money. Then you have less capital for the next, go around for the next good trade, and then you're on higher leverage. So then you're, really panicking about your stops, right? So you could see how this is a very vicious cycle, right? So the market, for the most part, is designed to take money out of, the hands of the people who are more prone to FOMO, more or less emotional, who want to carry heavy risk. And the market is much more favorable to those who want to take less risk and wait for confirmations, okay? Because one thing is that you have to accept as a fact that most people don't really know where the market is going, okay? We have a certain set of ideas, right? We understand that, at least in our community, for the most part, we've been calling this drop, okay? So we knew for the most part that, okay, it's going to happen, but did that mean that I'm going to go all in right here and all in right here? Not really. I mean, that's just gambling, right? So if you want to gamble, go somewhere else, because this is not the market for you, okay? So for the most part, you have to be able to weigh your odds. You have to be able to take trades properly, take profits, set your stops, understand invalidation levels, understand the basics of, the technicals. Anything in life, when you start up on a new skill, a new job, a new venture, you try to understand the concepts of what you're entering into, right? The new industry, the new business, right? Even if it's, gambling, right? You don't just go into a casino and you say, all right, I'm just going to bet, $100,000 on this. I don't even know what the game is, right? Imagine if you walked into like Texas Hold'em or roulette and you're like, okay, I'm just going to wing it. That'd be stupid, right? At least understanding technicals gives you a higher set of odds, okay? Even if you don't have to be, even if you're not, spot on 100% of the time, you don't even have to be right 60 or 70% of the time. Some of the best traders in the world have anywhere between a 50 to 60% strike rate, meaning that they only win that many percent of their trades. And yet they're still hugely successful. Why? Because they manage their risk, they keep their stops tight, they make sure that once their stop gets hit or their levels are invalidated, get out of the trade, wait for the next one. Okay. All right, I know that's a big lecture, but I really need to say it because I know there's a lot of people who are just constantly losing money in this market. And, I know you have jobs and you have kids to take care of and you have a lot of responsibility. And I think we all do, right? We're not all sitting there in front of the market waiting for this big, red candle or this one or this green candle. It's hard for us to catch these movements. But if you understand the probabilities and realize that, okay, I'm okay with being wrong, right? So if I'm wrong and I took this trade somewhere over here or somewhere over here and I get stopped out up here, that means clearly a big invalidation level was hit. And getting stopped out was probably better because either it was going to be a wick like this, which I'll never know if it's going to be a wick like this and then come down, or if it's going to be like this, and then it just keeps heading up and up and up, right? So setting your stops, understanding, where you're going to be wrong, where your levels are going to be invalidated for the trade is of critical importance. And if you don't respect that, then you don't respect yourself and your money, okay? All right, so we've talked about managing risk. We've talked about not prematurely entering trades. Okay, this weekend I'll try to do a risk management seminar. I'll also try to do maybe just the basics of technical analysis. Even though I have an entire course on the Cryptosomniac products page, I'll do a quick brief one of showing y'all to understand how I trade, how I watch trades, where I set up my invalidation levels. What kind of trader am I? What are the things I look for? Rarely have you ever seen me, if ever, use indicators to give me a judgment of what's happening. Why? Because I personally think that they're pointless. Most of the indicators are lagging. I know there's a lot of people out there who say there's this buy signal and sell signal indicator, and they swear by it, right? Which I think is ridiculous because those buy and sell signals are coming from this. So why pay for some, buy and sell signal indicator if this is free? If you can just understand the technicals of how to understand, how fibs work, and how horizontals work, and how invalidation levels work, and most importantly, how the trading psychology behind all this works, right? If you understand that, then you don't need these shady indicators, okay? Then you just rely on yourself. It's like the whole idea of give a man a fish and he'll eat for a day, but teach a man to fish and he will eat for a lifetime. Okay, so let me teach you how to eat for a lifetime. Come join our community, come learn from us, come understand exactly how we take trades, how we manage risk, how much hard work we put into this community, right? I give a night updates through the day, provide different analysis for what's happening in the markets. I provide short-term trades and medium-term trades and long-term trades. I show you exactly what my open positions are. I even, started this Cryptosomniac suggestions channel because I really care for my community and I want to deliver excellence in content and communication. So I asked, what are the things that I can improve upon? What do you want me to do more? Should I do more live sessions? Should I do more content? Should I, whatever, right? And so all these suggestions right here, I'm going to start taking them into account. I'm going to start writing them down. I'm going to start doing them. Why? Because I love the work that I do. I like the people that, are part of my community because they're good people. They're good people who, want to understand how to trade. They're good people who want to pay for vacations and pay for their, loans or college debt, or pay for their kids, or, whatever, right? Whatever you have in life to take care of. I want to show you that markets like this can make that possible. But they will never make it possible, and they'll almost make it impossible and steal money out of your pocket if you keep trading on your emotions, okay? So anyway, going back to this chop validation right here, 4-hour chart, you can see the RSI is really trying to climb back up. I mean, for the most part, the RSIs on the 4-hour time frame is not really useful at the present moment, but I want to show you guys this parallel channel. Okay, check this out, right? Very useful, I think. Bottom touch, top touch, right? Comes down here, bottom touch, top touch, breaks through, trying to come back, retest this area as a resistance, and then hopefully coming to fall back down. But like I said, this could go something like this, boom, boom, okay? Again, I think it's unlikely, but do I think it's possible? Yeah, I think it's possible. But, here's the thing, folks, right? When you consolidate for 3.5, 4 weeks right here, okay? And just like you did over here, consolidation, in a descending triangle, and then you break down, right? And then you do it again right here, consolidate 3 weeks, 4 weeks, break down. I don't think, not that I don't think, okay, I'm going to say this with a little bit more confidence and experience. I have more often not seen distribution or, consolidation like this that leads to expansion to the downside and then only to just rocket back up, okay? So if you're concerned about, missing the bottom in a bull market, right, first of all, don't even worry about it. You will have plenty of time if, this is going to be a bottom like this and we're just going to push back up, all right? But for the most part, when we have a 3-month consolidation like we did up here, and then you break down, 3.5 more weeks, consolidate, and then you break down, you don't just kind of head back up. What you're really doing is, you're consolidating right here before expanding more to the downside, okay? But in this case, what could be happening here is bulls are trying to do their best to force out as many stops as they can, like this right here, and then dumping, okay? Because that means whenever they've stopped out these positions up here, or this candle that just happened, that means they just have to pay up less when prices go down, right? Because they've basically taken out a lot of orders that were already there, and then they'll get people to FOMO along with them, and maybe take some orders off their hands who are long, okay? So anyway, I still do think that this should lead to more expansion to the downside. Though this candle right here is not the best looking candle, Something else that could happen through the day is, we go up, we retest the bottom of this block right here, where all this was, where'd it go? All of this was, support right here, right? And then we could flush back down. That's also a possibility, right? So we just had a 4-hour close right there, as you can see. So not too bad of a close, honestly. Let me check out the volume on that. All right. Decent volume, right? But nothing too great. Okay. Pretty low volume compared to everything over here. It's like actually by far some of the lowest volume that we've had for the last, month or so, right? So it doesn't really concern me a whole lot. And again, like I said, if I get stopped, I get stopped. That means that, this thing might actually, head up just over here or maybe even higher, who knows, right? But the thing is, I don't care where it goes after I get stopped. Then I'm just going to wait to see exactly where it stops, whether it's like over here, which is probably the most likely area for, this price to stop in, right? This particular block right here, okay? Because this was all, support, support, support. This was pretty close to support, right? So I would expect maybe this blue block right here gets hit and price, sort of goes up like this, pushes up, and then pushes back down, okay? All right, I think I've taken up enough of your time, and I've definitely taken up enough of mine. Daily chart, still under the 200 moving average, still under, pretty far under actually the 21 EMA, and we're actually gravitating farther and farther away from the 200 moving average. Okay, so this is typically not a good sign. All right, and yesterday someone talked about the death cross, which is the 50 hitting the cross of the 200 moving average right there, and once the 50, which is the lower moving average, crosses under the higher moving average, this is typically seen as a death cross. But I mean, definition wise, they both have to be sloping down, but honestly, I'm pretty sure the 200 moving average is gonna probably go like this at some point. It's just gonna go like that and just slope down, okay, over the next month or so. All right, okay, let's see, I don't know if there's anything else to talk about. All right, weekly chart, I've already stated that Bitcoin does like deeper retracements when it does start coming down. So that deeper retracement from the bottom of the 2018 bear market to the top of the 2019 bull is, price is currently just hovering above the 618 fib. I mean, I personally think, that price is probably going to retrace to this block right here, which is, about an 80% retracement, maybe 82%. I know it looks a bit unlikely right now, and people are saying that what if this is an SFP right here and we're going to push back up. I guess it could be. I mean, the chances are a little bit lower. Again, after 3.5 weeks of movement, I doubt that all we were going to do is just go like this and then just take off. But again, I don't mind being wrong. Like I said, that's just part of trading. If I'm wrong, I'm wrong, right? That means that, if I am wrong and I get stopped at 76.50 and then we push higher, say higher than 8,500 or 8,800, that means that this thing could at least take me back up to, 11.6 or 12 or 13,000, which is fine with me if I'm going to wait for, swing longs. But if I'm right and I stay in my position and don't get stopped, this thing is just going to keep going down, I'm fairly certain. Or sorry, not over there, but somewhere over here at least. Okay. All right. I'm going to wrap this up. Don't want to make this too long of a thing, but thank you so much for watching, folks. I really appreciate it. And again, give me a thumbs up if you enjoy my content. Also, come join our Discord community. There's going to be a Discord link in the YouTube description. Go to cryptosomniac.com and you can see, my technicals course if you want to learn, or come join the Advantage community and come trade with us, see what we're all about, or even just come, learn and watch our Bitcoin analysis, our YouTube analysis, how we provide updates, how active we are in the community. Because all you guys get, on the free side, the people watching on YouTube, is this video. And through the day, like 95% of the stuff happens through the rest of the day. So I talk about everything with my community through the day. Okay. Everything that I see, what could potentially happen, trade setups, new articles or videos to watch in education, news articles that come out, everything. Okay. All right. Thank you so much, folks, and hope you guys have a wonderful day. Cheers. Happy Friday.